Welcome. In this video, can Zen coin go up 12x? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
In chart analysis, trend lines are critical tools for identifying the direction of price movements and potential support resistance zones. In particular, ascending trend lines indicate that buyers dominate the market and that the price is moving upward with increasing momentum. An ascending trend line is typically drawn by connecting higher lows, and this line acts as support every time the price pulls back. This commonly seen structure in technical analysis strengthens investors' buying decisions as the price consistently bounces off the trend line and creates higher highs. Now let's examine in detail the logic behind this structure, its possible effects, and how it reflects investor psychology. First, the presence of an uptrend is one of the most important signals for determining the general market direction. If an asset consistently makes higher lows and higher highs, this is a strong indicator of a bull market. In the eyes of investors, the ascending trend line acts like a resting place. Each time the price approaches this line, past experiences remind investors that this area has acted as a strong support zone, which leads to increased buying pressure. This is the practical application of the famous saying in technical analysis, "The trend is your friend." Investors often prefer to open positions or increase their existing ones whenever the price approaches this line. This is because previous touches to the trend line have resulted in strong upward moves. As long as the trend line remains intact, there is a belief that upward momentum will continue. This belief keeps buying pressure alive in the market. For short-term investors or traders, these kinds of ascending trends can be very profitable when used with pullback strategies. Each time the price approaches the trend line, it can be seen as a buying opportunity. The psychological impact of this ascending trend is just as important as its technical significance. When market participants recognize that they're in an uptrend, they typically avoid panic selling. Instead, they assume that corrections are temporary and that the price will resume its upward movement. This leads to reduced market volatility. Additionally, the trend line acts as a kind of psychological safety net. As long as the trend line holds, investors are more willing to stay in the market. This helps preserve liquidity and allows prices to rise more steadily. When the price repeatedly touches and bounces off this line, the strength of the trend increases even further. These bounces not only reflect the chart, but also indicate a strong underlying supply-demand balance. For example, if the price touches the trend line 3 or 4 times and bounces upward each time, it becomes clear that this line is not just a graphical element, but a real support level. In this sense, the line becomes a reflection of investor behavior, not just a technical indicator. For such an ascending trend to continue, several important conditions must be met. First, after touching the trend line, the price should respond with strong and high-volume upward moves. Low-volume increases often lead to false breakouts. However, high-volume reactions after each touch indicate that the trend is built on solid ground. Additionally, news flow, general market sentiment, and macroeconomic developments also play a role in the continuation of the uptrend. If there is general confidence in the market, investors are more likely to trust the trend line and buy. It's crucial that the price does not break below this ascending trend line. If it does, many investors may believe that the upward movement has ended, leading to panic selling. Many investors tie their stop-loss levels to this line. If the trend line is broken, those stop orders are triggered, increasing selling pressure. Therefore, the break of the trend line signals not only a technical reversal, but also the loss of psychological support. That's why price bouncing along the trend line, meaning it reacts upward and makes new highs each time it touches, is a sign that the uptrend is continuing in a healthy way. Another point to pay attention to in chart analysis is the slope and duration of the trend line. If the line is too steep, it may be unsustainable. However, a more gradual, time-distributed line with multiple touch points indicates a much stronger and healthier uptrend. In such trends, frequent contact with the trend line is not a negative sign, it's actually positive. These touches show that the trend has been accepted and confirmed by the market. In conclusion, when the price moves along an ascending trend line with consistent bounces, it forms a very positive structure, both technically and psychologically. This structure gives investors confidence, sustains buying pressure, and creates a positive market atmosphere. As long as the price remains above this line, new highs become much more likely. Therefore, when such a structure forms, investors should act carefully and strategically, using the trend line as a guide to make better informed investment decisions. Especially in volatile markets like cryptocurrencies, it's important to remember that the trend is your friend. As long as the price stays above the trend line, continued upward movement is a highly likely scenario. But we can't base analysis on trends alone. Let's now take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because Onyx Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
The MACD indicator is an indispensable tool for investors in the world of technical analysis. This indicator is used to detect trend changes based on the convergence or divergence of two moving averages. Especially when upward crossover patterns are observed on this indicator, it can be a sign of a potential bullish movement. If a possible upward crossover has formed in the current technical outlook, this structure is perceived as a highly positive signal by investors, creating strong expectations of an upcoming rally. The interaction between the MACD line and the signal line, the main components of the MACD indicator, plays a major role in understanding market momentum and direction. Specifically, when the MACD line crosses the signal line from below, it can indicate the beginning of an uptrend. This crossover suggests that market momentum is starting to shift from negative to positive. In such a case, it is believed that buyers are beginning to dominate the market, selling pressure is decreasing, and the price is preparing for an upward movement. In technical analysis, it is often observed that buying pressure increases following such crossovers. The MACD crossover not only signals direction but also measures momentum. So it's not just about the direction of the lines but also about the length of the histogram bars, which gives an idea about the strength of the potential price momentum. If, after an upward crossover, the histogram bars begin to rise above the zero level, it shows that the bullish momentum is strengthening and that the market is supporting an upward movement. Especially when the MACD line clearly crosses above the signal line and this crossover happens below the zero line, it can be a strong indication that a trend reversal is beginning. When investors see such a crossover, they tend to increase their positions or open new buy positions. As a result, significant and sudden price increases may follow the crossover. Particularly if there has been a prolonged negative momentum during the previous downtrend, an upward crossover may signal the beginning of a major trend reversal. However, investors should evaluate MACD crossovers in conjunction with other technical indicators. For example, if the RSI breaks out from the oversold region, or if the price reacts positively from a support level while the MACD forms an upward crossover, this situation is considered an even stronger bullish signal. Moreover, the timing of MACD crossovers is also critical. A well-timed crossover signal can provide a major advantage to the investor. When such structures form as the price bounces off an important support level, the potential for a stronger and more impactful rally increases. Therefore, investors should consider not only the MACD line crossover, but also the relationship between this crossover and the price action. An upward MACD crossover also creates a psychological effect. A positive sentiment forms in the market, and traders usually take positions in the same direction when they see the signal. This creates a chain reaction that pushes the price higher. If this crossover occurs on higher time frames, 4-hour, daily, weekly, investors can expect a stronger upward movement. This situation becomes an important signal for both short-term and long-term investors, as MACD crossovers on these timeframes typically indicate more persistent trends. The occurrence of an upward MACD crossover generally represents a buying opportunity for investors. However, for the rally that follows to be sustainable, volume support, alignment with other indicators, and overall market sentiment are also extremely important. The widening distance between the MACD and signal lines over time indicates increasing momentum and strengthening trend. Particularly if the MACD remains above the signal line, it signals that the positive momentum is continuing. Price movements following such crossovers often lead to the breaking of previous resistance levels. The signal given by the MACD implies that the price may break through these resistance levels with ease. Once resistance is broken, new waves of buying can form, deepening the upward movement. At the same time, investors should be cautious about potential pullbacks after this point. In some cases, the MACD signal may come early, and the price may first go through a correction. These corrections are considered healthy for a sustainable rally. For a healthy uptrend, it is considered more reliable when the price progresses with periodic pullbacks. In summary, a potential upward MACD crossover on the MACD indicator is a highly positive development in terms of technical analysis. Such a crossover signals a potential reversal in direction and the start of an upward move. Especially when the MACD line clearly crosses above the signal line and the histogram bars transition into the positive zone, investors may take positions more confidently. This creates an environment in the market where the rally is supported both technically and psychologically. Therefore, the MACD crossover is not just a signal, but a highly important structure that may mark the beginning of a bullish trend.
One of the most striking patterns on the chart is the cup formation, a classic and reliable structure in technical analysis that signals long-term bullish potential. The basic structure of this formation resembles a U shape, created when falling prices bottom out and then rise back to their initial level. Investors refer to this as a cup formation. These types of patterns are among the strongest technical indicators, especially when they appear after a long downtrend, showing that an asset is starting to recover. On the chart currently under review, this cup formation has developed in a very orderly and distinct way, clearly signaling a potential price breakout in the future. Once the pattern is completed, it typically suggests a price increase equal to the depth of the cup. Given the current depth, this implies that the price could potentially rise by approximately 12 times or 12x. One of the most important aspects of the cup formation is how cleanly and healthily it forms. The current structure in front of us is highly symmetrical, balanced, and textbook in nature. Such symmetrical cups tend to gain investor confidence and can make it easier and faster for price targets to be achieved. The consolidation phase at the bottom of the cup is also highly significant, as it represents a critical zone where panic selling has subsided, weak hands have been flushed out, and strong buyers have accumulated positions. The healthier this consolidation phase is, the stronger the upward move tends to be once a breakout occurs. At the moment, the price is steadily moving upward on the right side of the cup, which is a strong sign that the formation is close to completion, suggesting that a rally may be imminent. The target of this formation is calculated technically as follows. The distance between the highest point of the cup and the lowest point is measured, and this distance is projected upward once the formation is completed. Since this distance is currently quite large, a post-breakout price increase of around 12x is technically anticipated. Such ambitious price targets are particularly significant in the crypto market, as they help break psychological resistance and trigger FOMO, fear of missing out. When the price starts these explosive upward moves, many investors jump in to gain more profit, significantly increasing buying pressure. One of the key elements needed for an upward breakout from the cup formation is volume. Typically, a surge in trading volume is expected at the moment of breakout in cup formations. This increase reflects investor confidence that the price will reach new levels. Currently, with the cup close to completion, there is a gradual increase in volume, which is another positive technical signal that the breakout may soon occur and the price may begin moving toward the target. A volume spike at the time of the breakout can both speed up the process and make it more stable. On the other hand, after a successful completion of the cup formation, a short-term correction called a handle often occurs. This pullback phase usually marks a period when investors take profits, the price briefly consolidates, and then makes a strong upward move again. If such a handle also forms and is followed by another breakout, this results in a cup and handle formation, one of the strongest and most reliable bullish patterns in technical analysis. In this context, a short period of consolidation helps support a more sustainable and trustworthy move toward the large target. Investor psychology also plays an important role at this stage. Because cup formations are usually long-term patterns, patience is required. Investors who maintain their positions over time often reap the rewards of such strong patterns. With the cup close to completion, patient investors now have a high potential to gain significant rewards. A healthy development of the formation prevents emotional decision-making and helps investors act more strategically and with a clear plan. In conclusion, the cup formation currently on display is one of the strongest structures technical analysis can offer. Its symmetry, rising volume, upward price stability, and the potential 12x target could signal a major opportunity for investors. Of course, the crypto market is volatile and risky, but such technical structures provide powerful references for making rational decisions. If the formation completes and breaks out upward, it could indicate a multidimensional rally supported by technical, psychological, and fundamental dynamics. Therefore, investors should monitor this formation closely, evaluate any potential breakout, and act with proper risk management, a highly strategic approach.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos.
I wish you all a lot of profit. See you soon.